Hi, it's Carlo, and welcome back to CMC Markets Trend Tracker Series. Today I'll be analysing some of our top traded instruments amongst our clients, which will include Forex, gold and oil. So let's just jump straight in. The first chart is the Australian US dollar chart. The Aussie has gained over the last few weeks in line with a bounce in US and global equity markets. So we might call that risk on. Good times in equities, and the Australian dollar tends to be correlated highly with a move in global equities. And also a divergence of opinions between central banks. The Federal Reserve, as widely as expected, they may have delivered their final rate rise for the year, whereas the Reserve Bank of Australia continues to focus on that sticky inflation picture here, and perhaps we have one or two more rate rises in 2024. So that has certainly pushed the Aussie higher. Technically, you'll see the Aussie finally broke above that previous strong resistance line at 65.20 and it rallied close to 66 cents. Note the exponential moving averages, EMAs, in yellow and dark blue crossed over last week as well. Another positive signal on the daily chart. And from here, EMAs trending up nicely. That 65.20 mark is most likely to present decent support. And look at the MACD down below as well too, trending higher as well. White ribbon is forming, moving in line with the underlying price action. And if we're looking for targets for longs, back up around that 68.90 or 69 cents where we had a double top back in June and July. Is that target achievable? It's certainly possible if global equity markets continue to rally, and that is something to look out for this week when trading the Aussie dollar. The next chart we'll focus on is the dollar yen. And last week we saw the first real pullback in dollar yen, which has been trending strongly for most of 2023. And that has been again because of US yields dropped and the US dollar dropped as well against all currencies. And so we had a very sharp move lower in dollar yen. It was a technical reason last week. Have a look at prices. That red, those two red candlesticks pierce the 20 EMA and the 50 EMA in yellow and dark blue, cause a very sharp sell-off. That was the reason behind it. The markets have been long dollar yen for a long, long time. Now, going forward from here, this uptrend has certainly lost a lot of momentum. Around that 151.65 mark, we've had multiple tops there. And if you're looking for further retracements, pop on some Fibonacci retracement levels, which will give you some potential targets around 146.45, that's a 38.2% Fibo, and the 144.80, which is a 50% Fibonacci retracement level. Just something out of left field for you. Keep an eye on the Bank of Japan, perhaps possible intervention. They would like to see the yen strengthen. I remember quite a while ago, decades ago, in 1989, when I was trading it, the Bank of Japan did deliver a surprise and shock interest rate rise on Christmas Day. And yes, this year Christmas is on Monday. And yes, the markets will be open in Japan on Christmas Day. If they want an element of surprise, they could do something similar on this Christmas Day. So you've heard it here first. It's a possibility. You might see that picked up in the media over the next few weeks or so, but it certainly is a possibility and something for you to look out for and think of in the weeks ahead when trading dollar yen. The next chart I'd like to move on to is gold. Now, gold has been one of our most popular traded products due to the increased geopolitical tensions in the Middle East. And that has seen gold shoot higher on the daily chart from close to 1,810 US dollar an ounce up to 2,000 US dollars an ounce. You can see that we've had multiple tops around 2,000 US dollars an ounce. Now, currently, if you are trading gold, you need to be on top of the latest news. Latest news being a ceasefire between Israel and Hamas and a hostage exchange will be taking place. But gold hasn't really come back that much. So traders trading gold are still fearful and still are attracted to the safe haven status of gold. And you see prices here are being squeezed between 1985 support line and 2,000 US as well. So something has got to give very, very soon. Keep an eye on those two levels. as we move forward, and also geopolitical situation as well when trading gold. And finally, I just wanted to cover oil for you because it has been very topical and traded heavily amongst our client base over recent weeks. The reason why the oil price is in a very strong downtrend there, you can see the EMAs have crossed over around the $85 mark, and there's a strong downtrend in place, has been the Israeli-Hamas conflict hasn't really spread outside of Israel and Palestine, and it hasn't caused any supply disruptions as yet. And the oil market and traders have been focusing thereupon on weaker global economic growth and likely less demand for oil. And that is why we've seen a very big fall in oil prices over the last month. And as you can see there, from when the conflict first started, 7th of October, prices have been selling off almost straight down. So from here on going forward, look at the technical picture. The 20 EMA and the 50 EMA most likely be strong resistance levels moving forward, and of course keep an eye on economic growth. You know, the EU and Germany is very much in recession, so what that means for oil demand is not positive at the moment, so that might continue to weigh upon West Texas crude in this chart, and Brent crude as well too. So there you have it. That's my analysis for today. Thank you for watching, and I'll see you in the next video.